Just doing a sound check, everyone. That was the Pop of the Runa getting ready. I miss doing these Wednesdays broadcasts, so I'm looking forward to today. I hope you folks are too. Welcome everyone to the Kindle Report. This is a special live cast. Have not done one of these for quite some time. I think going back to maybe November of last year. So it's good to be with you all. Remember to subscribe and like these videos and hit that notification bell so that you know when I come live. And I usually do live meeting every day. I have changed the format a little bit. We're now posting meeting at the same time every night. So folks, here we are, Fed time. Markets are gyrating around and getting ready for the big event, right? So we traded negative earlier this morning and now we're back positive. So there's a couple things that we probably need to talk about. Just so you know, in case you missed it, Joe Biden came on and told us all how well everything's going. So that's good to know, right? Inflation is not a problem. That was a joke the other night at the big press comedy meeting they always have every year, which is a joke anyway, pun intended. And so anyway, yeah, listen, I think we are in some very unique times. I think these are very difficult times to try to figure out from the standpoint of what is next, right? Every time you think things have gotten crazy, it gets crazier. You get now you're getting leaks in the Supreme Court. You got, I mean, just chaos everywhere. It just doesn't go away. I mean, it's amazing. Elon buys Twitter. Peter Thiel's threatening to buy Disney. It's funny to watch what's going on right now. It's just like the world is awash of money yet because of what the Fed's done, and now they're trying to take the punch bowl away. So let's get in to talk about the 10,000-pound elephant in the room, which is the Fed. So we know they're going to do 50 basis points. We don't know what they're going to announce on taper, right? We don't know those numbers. And in reality, they can't do it fast enough. And there's so many people, it's fascinating to me, that have, I mean, the consensus now, if you want to go against the consensus is that inflation is peaking out and it's going to be better. Everything's going to be okay. So now you can just go back to life as normal. It's all going to be okay. That's not going to be the case. News out today, right, is the EU is talking about basically boycotting all Russian oil. They get 25, depend on the country, but roughly on average, 25% of all the oil comes from Russia, right? Natural gas and oil, but oil, right? So they want to eliminate that. And I saw, I forget who it was, but a politician going, we have to do this, right? We have to destroy everybody's life. So it's this is going to make it really interesting. Those of you that have been in my live room and know that I've been talking about this for a while, that we did an XLE hack in our software, and it has done quite well from standpoint of when we started just in January. But the realities is that this oil situation is long from over. You take 25, you disrupt another level. Maybe Russia discounts it, sells it to India and China, and they still don't cut them off. I mean, if you look at the ruble is higher right now than it was before all the sanctions started. So what's going on? You know, nothing any of these folks are doing is affecting the people they're trying to affect. It's affecting all of us. And so it's getting, best way to put it, more and more interesting from the efforts that are being made to what's happening. So I've got a few notes here, and I would compare the European Union. You can go back, for those of you that aren't as old as I am, and in 1973 was in college and going through the oil embargo of 73. There were all kinds of gas lines, all kinds of stuff, odd even days you could get gas. You could wait for an hour and a half to get gas, and they run out right as you get up there and have to go do it all over again. If you still had enough gas to do it all over again, and you were literally turning your car on and off while you're waiting in line. So One thing for sure, these same politicians that are telling you they have to do that, you guarantee the government cars are all going to be filled with gasoline and they're going to have all the oil they need, right? So, not a problem for them at all. I don't know what's going to happen here next, folks, but there is major disruption coming. I've talked about this on the nightly videos as well as going through some stuff in our live trading room behind, more or less behind the firewall, away from the arbiters of truth, and being able to talk as normal people. Maybe that's all changing. I've noticed a huge tone shift in Twitter, not necessarily to more rude, but it's always been rude. It's a war zone, but it's really been I guess, the result of people feeling easier to talk, and that's hopefully we get to that point. And so I'm going to go on here for a little bit. We'll get tuned into the channels. We'll bring up and we'll listen to the message. I don't think we'll listen to much of the conference of Powell, but maybe so, depending on what kind of markets go on. And I'll try to keep some dialogue going there from that standpoint. So, but there's definitely some things that we're going to have to be paying attention to. And going back really 2 quarters ago, going back into fall of 21, I've been saying that the economy was going to hit a wall, and that's exactly what's happening right now. You're seeing the wall come upon us. You're starting to see real estate slow down. You're also, looking at look at the JOLTS report. We're at, I think, 11.5 million jobs. There's 2 jobs for every unemployed person right now, and are they good jobs? I don't know. Some probably are, but there's a massive disruption when they shut down this economy, the world economies. That's just changed everything. And I think the next thing we're going to have to deal with, we're going to have there's going to be food disruption, I believe. How bad, I have no idea, but I think there's going to be shortages of especially in the grains and some of the key markets there. We know what's went on in fertilizers. I mean, this whole thing is just a giant, really just a giant cluster. And it's unbelievable what is likely to come next. And so disruption is what we will count on. And back to the Fed for a minute, kind of all over the place, getting into the flow here as we're seeing quite a few people showing up. Thanks everyone for coming today. We just have, talking about the Fed, total incompetence across the board. Powell is probably the weakest chair I've seen ever in all of my career, and I go back to the very first one at Paul Volcker when I started in 1979. And I mean, Volcker was a true hawk, man. He was a huge man, and he wasn't. He attacked inflation, and the Fed's big problem is inflation. People are trying to talk about the economy. I posted a fun little thing yesterday showing a monthly chart, just a closing graph of the S&P, and when the Fed said, okay, we're going to divest all of our investments and all that, they did it right at the top, and the market's straight down since they got divested. So was that by plan? Who knows? It's sure odd that all this came out right at that point, and okay, we won't do it anymore. And now we've got all of the things that are expected. So I think if you look at the public discourse that is going on right now around the cuts and what's going to happen, it's just all over the board. There is a whole group of people that are just perma bulls and everything's going to get better. And they talk about, listen, fundamentals are important, but they talk about how, the fundamentals are still very strong. Well, fundamentals are looking in the rearview mirror, okay? There's no forward-looking ideas coming. If you start to look at all the forward guidance we're getting, look at Uber and Lyft just today, for example. okay, they're spending a bunch of money, but they're not giving good forward guidance. This is not going to happen here. So, and I just see a comment here that somebody said, if Russia cuts Germany oil, Europe will collapse. And that is the point of what I was saying. This would make the embargo, oil embargo of 73, like a joke. And this will collapse not just Europe, it's going to collapse all economies because everything's so tied together here. This is absolutely ridiculous. And it, I don't want to get into a conspiracy type thing here, but think about it. It almost seems orchestrated. Everything is going one step with another. I mean, it's just this leak in the Supreme Court isn't maybe an effort just to discredit the court, to take over the court. So, we're seeing some real, I wouldn't call them fundamental shifts. I would call radical shifts in how the world's acting. The Australian government announced they're going to take a 30% to 40% equity position in private homes. So why would they do that? So they can control it. We have ownership. And, I argue all the time with friends and say we don't own anything anyway. We rent everything because we have state and federal taxes, and everything that we have has a tax. If you don't pay it, they'll confiscate it. So you never really own anything. You're always renting it. And that's just the way it is when you look at private home ownership with all the taxes and everything. I could go on a serious rant on some of this stuff, but I'm telling you, what we're seeing right now, folks, is well beyond any equity market and anything that's going on. So let's talk a little bit more about the Fed. I want to get more focused there, and then we'll come back to some of this rhetoric, and then we're going to do some deep analysis, look at some of the long-term charts. Hopefully, maybe at the end I can take a couple things from you folks and be able to maybe, go through some individual stocks and talk about things. But, we'll just see. There's going to be, I think, a lot to go through here very shortly. I'm just looking at some more notes here. Yeah, one of the notes that I just brought up was this whole oil embargo could just roll the entire world economy. And, I talked to somebody. I was at a wedding out of state weekend before last, and I talked to somebody from South Africa. It's a brother-in-law, and I asked him, hey, I haven't heard of you been back home? And he goes, yeah. He goes, they've taken South Africa and African nations. He said they've moved them back 2,000 years. He goes, you wouldn't believe it. He said, I'm never going back after my last trip. So I was just like, wow, but that's what's happening. They're resetting the Klaus Schwab Great Reset is just that. They're resetting everything back, and they're sending some countries back to places that is unimaginable. And it's one thing to read stuff in the news, but I've got good friends in Australia. I lived in Australia for a while. I've got people, and a good friend of mine in Switzerland. I know people around the world, and it's one thing to read the news, and it's another thing to hear what's going on. And it's not pretty out there. Is somebody not liking me? Oh no. I love it. I actually love you, trolls. Thank you for showing up. You guys are golden. I think it was Ty Lopez once said, trolls will make you money. Thank you, trolls. Come in. That's good. I can, if everything's all planned. Yeah, I'm just looking at some of your comments here, just interreacting. Haven't done one of these for a while. It's fun to be hanging out with you guys. And yeah, who Ethan, is that our guy who's not liking what I'm saying? But anyway, Trust me, I'm not sweating it, Carlos. I'm good with this. I listen. I actually appreciate the only thing I ever ask. I don't care if people disagree with me. That's fine. That's what it's all about. But just don't call me names and do stuff like that. So we're going to go through a lot of stuff here today, folks. I'm going to hang out for 2.5 hours, and we've got a lot to do. I've got things set up for. I'm just checking out some of my setup here, just for. I will flip over when it's time for the Fed to go over there and talk about a little bit about that. So before we get into that, let's review the markets real quick. Like I said, we'll come back to this dialogue, but I think they're I'm anxious to see what happens, what they say, and then come back and have some dialogue after this. But it's becoming more and more obvious that the economy is starting to roll over. I've argued for a while that real estate prices aren't going to decline. I don't think there's going to be a massive collapse in real estate prices. I think what we're going to see is a slowdown in real estate sales volume, which we're seeing already. But then we're also what prices will stay higher primarily because of replacement cost new. I used to be an appraiser when I was a younger lad in my early 20s. And one of the things that you have to do is to do what's called replacement cost new. So you have to figure out what it costs to build it. And sometimes the market price can be less than replacement cost new, but right now replacement cost new is driving housing prices or keeping them where they are and not likely to go down. Listen, I don't think inflation's over. I remember being one of the very strong voice against that the whole thing was transitory. I said it's not transitory. It's going to be here for a while. We're just going. This summer is going to be a real test. We're coming into planning season right now. I'm really going to make. I've told you that you folks this before, but I'm going to make an effort to really get on with my with a buddy of mine. He was actually my first boss, first research department I worked in back in, 1990. I guess it was 1990, 1988, and I was head financial guy there, covering pretty much everything I cover yet. Same thing where I've been covering forever, financials and gold, and I used to be really deep into currencies. Now I just cover the dollar index. So things have changed since then. But I'm trying to get David on because I want to do a podcast with him because I think there's going to be. He's an expert in the agricultural area, and I really want his opinion. And so I'm going to make a real effort to get a hold of him. I'm looking to start some kind of podcast content with some friends. Those of you that follow me on Twitter may have caught last Friday night. My buddy Hugh Hendry and I had a great conversation on a Twitter Spaces. I believe we're been chatting back and forth to do. Even I'll come on his. If I go on his podcast, this is kind of funny. I have to take my shirt off, he said, or I can't come on. So, but I told him he can have a shirt or no shirt if he wants to come on my podcast. If you know Hugh, he's a funny guy. He's brilliant. He's one of the most brilliant guys I've known. I've known Hugh for, I don't know, 12, 14 years. So anyway, I digress here. So let's take a look at a couple things here just to, let's take a look at what's going on in the markets right now. And we'll look at the S&P is up 10 handles. It was down a little bit earlier. I'm going to do a very quick review. I've only got about 5 minutes. To set this up. But basically what we're looking at, the 10-year setting at 299, up 111. We're looking at the Dow's flat to down. Gold is down, still under pressure. Crude oil up $5. This is just the beginning, right? Natural gas up 5%. Heating oil up 1.6. But if we look at the indexes, we're just in holding mode with the exception of the Russell, which is well under pressure. So I'll have to decide. I see some of your comments about Hugh. I would love to do something with Hugh. In fact, Hugh was a keynote speaker at my 2010 conference for my institutional clients back in the day, and I pulled some clips. I'm going to post a clip. It's probably about 30 minutes or so from on Hugh's conference. There was some interaction that we did at the conference, and he challenged me to a debate there, but I was in front of 350 of my institutional customers. So I thought, I don't want to fail and get beat down by Hugh Hendry. He's a pretty smart guy, but it would have went fine. I'm sure it would have been fun. In hindsight, I wish I had done it. So, but anyway, yeah, so we'll get set up here. Let me just get things set up on here. I want to make sure that you folks can hear everything before we get time. We got about 7 minutes, so we'll get set up here in just a minute. Here we go. So let me know if you can hear this appropriately.
Insurance. Get your quote today.
I know we're on a commercial here, but just give me a sound check on this.
In the future, we'll travel to incredible places with the help of magical...
Yeah, so I'll shut the sound off. If you're hearing that, when it's time, I'll go full screen. Yeah, yeah, David, I do remember that. I will forever be Dr. Given. I can't get rid of that name. I wish I could find some of my old Pacific Options Exchange buddies. Everybody's disappeared. There's a couple guys that'd be just fun to have on as well. So, okay, good. Some echo. Okay, that's good to know. Let me try it one more time, okay? Because I think I know what the echo is. So let me know if you can hear the sound again. Let's try it one more time.
Bid.
We empower those who act. Those who see the correlation between things above and things below the surface. Those who navigate risk by meeting every turn with a heightened awareness of what's possible.
So let me know if that sounds better. I know there's about a 20-second delay here. So let me know if you could hear that. And if you can, then I know exactly what the echo was. So hopefully we get it all washed out here. We don't have long to go. All good, no echo. Awesome. Figured it out. Folks, it's fun hanging out with you guys. I mean it. I've got a lot on my mind. And like I said, I just want to we want to see what's going to happen with the Fed, and that will trigger the rest. Your questions are very important to me. I tell everybody in our live trading room, the best thing you can do is ask me questions. It will really open up the Pandora's box sometimes in a good way. Yeah, somebody said, wondering why you're selling your sell your indicators if you trade. Because I want you to have them. I mean, these indicators that I have on the screen here have got in my career. 1990, technically 1984, WaveTech was developed. This is my whole career. I'm a 70-year-old guy. You know, I'm sort of like I'm not comparing myself to Ray Dalio. I'm not been at that success level. Had a lot of success. We've managed $250 billion over the last 20 years. We've done a lot of stuff. But these are to help you folks out. And they're amazing. Once you learn some basic techniques, you're going to love those. So make sure you sign up. So let's see here. We are about 3.5 minutes away, I believe. So we'll tune in. I think they do a commercial break. They got David Kelly on right now, and JP Morgan guy, and he's kind of annoying, so we'll wait for him to get through. And yeah, I don't know. We'll just chat. I'm just answer a couple of questions. Will Bitcoin break from the markets? I mean, it's become a risk on, risk off asset. I talk about that a lot. I don't know. It really hasn't. I think it's went down, but I think it's showing more stability than I thought it might. So we'll have to see here. I'm just looking at some comments here. Do I think the Fed messaging is the most important for the last 10 years? Maybe. I see we're rallying. We're back up 19 handles now, so they're rallying into the numbers. So let's go ahead and get the sound going. Let's just watch this together. I'll go full screen on this so you can have. We'll just listen and watch here. I just don't want a whole lot. I'm going to go for 1 more minute of this stuff. I don't know if they're going to take a break or not here, but let's go ahead and go full screen.
Key really will be, to David's point, if and when we start to see inflation more meaningfully roll over, that's when we're going to see yields peak and more meaningfully roll over as well. So we think we're perhaps not quite there, but getting closer to a peak in yields as well.
Jim, if we want to get to 2% inflation, how high do interest rates need to go, and what's the risk of a recession implied by that?
So that's the absolute key question, and I think if the Fed...
Yeah, I'm just going to say this. This is the consensus that you're hearing here from the standpoint of inflation's peaking. Every one of these institutions, I worked in the institutional department at Prudential back in the day, and I was a head financial analyst. And these guys are just, they've got their opinions, but I mean, this is just as mainstream as you get. This is exactly what you're going to hear here. So I'll go back to it. I'm really just interested in hearing when they read the report.
Control inflation. I agree with what David's saying. I think that plenty of things are going to slow down, but will it happen fast enough for the Fed's liking?
Financial conditions not tight enough, Jim?
I don't think so. Based on where I see credit spreads right now, credit spreads have been hanging in pretty nicely, and it's really a question of having a financial market feedback to slow inflation down within the time frame that the Fed wants those inflation pressures to come down. So that's in the next couple of...
You talk about a corporate line. The credit spreads on Morgan Stanley and all the major banks are shooting up, and he's saying they're doing well. I mean, this is just classic stuff.
To 2% inflation within the time frame that the Fed is specifying without hiking more.
All right, Jim, it is like you knew what time it was, because right now we're going to go to Steve Leisman.
Here we go.
Steve.
Yeah, the Federal Reserve, I can tell you. Federal Reserve raising the target range for the federal funds rate by 50 basis points to a new target range of 75 basis points to 1 percentage point. The Federal Reserve increasing, says ongoing increases will be appropriate. The Fed will begin to reduce the balance sheet on June 1. It will ramp up the balance sheet reduction over time. It's going to begin with $47.5 billion in balance sheet reduction through August, and then after that 3-month period, it's going to reduce the balance sheet to allow the runoff of $95 billion a month as expected, and that'll happen beginning in September. That'll be a total of $60 billion in treasuries running off the balance sheet every month, $35 billion in mortgages. The Federal Reserve says household and business spending remains strong. job gains have been robust. The Russian invasion of Ukraine likely puts upward pressure on inflation and weighs on economic activity. A very quick analysis, guys. There's one sentence in here that was a little more dovish than I expected, and a lot of other observers thought there'd be a line in here about the Fed moving expeditiously towards neutral. It doesn't say that. It just says anticipates ongoing increases will be appropriate. Doesn't say how much. We're going to have to leave that for Fed Chair Jay Powell, and whether or not he'll put some character on the pace and amount of tightening to come from the Federal Reserve. But as expected, 50 basis points and balance sheet runoff ramping up to $95 billion a month. Kelly?
Steve.
Okay, folks, this is one of the classic trades after report that I talked about. I've got the level 2 up here on the screen right now. You get the spike. You actually fade the spike. So when they were trading up over 42 handle, that was where you fade it, and then they use it. It's about a 3-minute trade. Look at this. It's just selling off already. This is a classic trade here. And we'll talk about a couple notes of what they just said and what we got so far. Yeah, so you can see this reaction all the way back to 87. So we're looking at, what was the low here? Low was 82.25 on that rejection there after printing up at the 42.07 level. So about a 20-point rejection, and now they're going to bounce around here, but that's the trade. You fade that surge, you sell them, and then you buy them back almost as fast. They usually last a minute or two. I've done this on the in the live room in the past. But this is something interesting here. I'll just come up on screen here for a minute. So let's talk about it. So they're at the reduction rate that they're doing, 95 billion, 60 in Treasury, 35 in mortgages. That's pretty much a joke to the balance sheet. You know, they need to bleed off what, maybe $4 or $5 trillion. What year is this? You know, 4 years from now, that maybe they burn off enough of the balance sheet that it makes a difference. What a joke, folks. Like I said, maybe we'll watch at least Powell's opening comments here in 25 minutes or so. But I mean, this is very sad. And so I'll go into some of the things that I wanted to talk about. So we knew they were going to do 50. We'll see what Powell says. I don't think they're going to give us much transparency on the future today. I don't think you're going to get a lot more from there. Markets got basically what they expected. I don't see any surprise in there. The balance sheet runoff should be probably 2 or 3 times that. And what they're really probably doing is they're just not reinvesting for the most part. They're not going to be selling anything. So the runoff on the mortgages, if you look at like the old Fannie Mae funds that used to be around, you got the pay downs of the mortgages, and they're taking in and getting the pay downs of those mortgages, and that's all they're doing. So we're printing right back up toward the highs here, and I wouldn't be surprised to see it move higher just because there wasn't much in that was certainly bearish at all. If anything, it probably was more dovish, as Leisman was just saying. I think that might be the case. Just looking at yeah, so I still don't think, yeah, maybe pricing in 75 basis points. You have to remember, I was around when Paul Volcker was raising rates, and he raised rates substantially. I don't believe the Fed is taking this inflation scenario very seriously. And now we're selling off again, so we're getting a secondary sell-off here. And And one of the other things while I'm on this screen here, and I just want to point this out, is that there's no liquidity. We've been talking about this in the live trading room. I haven't really talked. I usually don't have this level 2 screen up during these my nightly live streams. But if you look at the size, there's anywhere from 10, 12 contracts on a bid or an ask. So anytime a big order comes, you'll see it move 200 points. Just to fill it, it'll just run through the order book, and you'll just see these jumps at 200 and 300 points back and forth. These markets are not very tradable, especially if you have any size. You're going to move the markets around right now, and you're going to end up paying up to get in and selling, paying down to get out. And so the spreads are way too big is really what's happening here right now. So we're getting a little sell-off. We're down to 75, so maybe we're going to flip this thing. Like I said, just lots of volatility. So let's go to another screen here. Let me talk about a couple other things, and let me move to the other side here, and we'll take a look at this is the daily S&P. I talked about this. This is the futures. We're up 375 now. One of the things that I talked about last night is I thought we could get maybe an R1. 41.96, we printed up to 07. 25 is R2. 42.22, and we're looking at the 10 period moving average down at 0.67 on the PPM. So this someone's asking about the PPMs. I'll show you an intraday chart here in a minute, but this is this downward slope, and I talked about this last night, where we get the 10 period moving average coming down during right into the market grid pattern. And when that happens, it's usually very negative. PPMs are still 0.64, 0.43. These are big trends on the downside. The probabilities of getting a big rally out of this particular position is not very high. We'd have to get the PPM1 and PPM2 probably below 0.15 to get to that level, right? So let me show you some intraday. This is actually using the indicators, and we also have some really cool stuff. These pivots are showing you on where the pivot points are coming, but you can see right here, and I've got it on the fat bar so it's easier to see for you here. But this is a 5 minute on the right hand side. These are PPM 1, 2, and 3. There's something else on this chart here that is these dots that are on the page. You see these little dots. Those are the Fibonacci price objectives, and these things are pretty awesome. We use them in the trading room. In the case of this 5 minute, we're running 2 Fibonacci patterns at once, looking for price projections, and these are real powerful. But with the PPMs, the price objectives, and you can see there's all the tools are right here. That these lines are being drawn are the pattern finder that's up there. So it's a really powerful set of tools to be able to use this in. But you can see right now on the 1 minute where these are the webs. These are linear regression lines. There's 20 of them, and we use these for trading intraday. And we're getting crossovers, so we're trying to turn this market back up. The 5 minute is neutral. Everything's kind of neutral here right now, so there's a consolidation. So we printed down to 70 level, and then we bounced back to 87. So we're getting a lot of volatility, and a lot of it has to do with what's going on with that pattern. So let's go and start talking a little bit about some of these longer term patterns and stuff. And I mentioned, I'm not going to go there. We'll stay with the S&P here. 1 second. We'll stay with the futures here, and this is daily, and this is on a weekly level. I'm sorry. Let's go daily. Here's daily. So we're coming into this 10-period moving average here. And the array that I've got on here, I use simple averages. And they've just been, they're part of the wave tech scenario where what we're looking at is what the wave counts are. There's a combination of moving averages and Elliott wave, and all of this stuff that's been in here has been corrective going all the way back. So we have not had a clean 5-way pattern, so we're still locked into a pattern that I talked about a while ago. If we go over to a monthly graph, we're still in this really high level consolidation. The 21-period moving average is coming in here right now. It's at 0.80, and that value at the moment is 41.42. This is a 21-month moving average, and I've been talking. I'm going to draw in a couple of things here so that you can see these very quickly. But what I talked about a while ago, going back into January, after this big reversal pattern here in January, what I expected is that we're just going to be zigzagging in this pattern here. And as these moving averages, let me just change colors here real quick. The moving averages coming, here's the 10 coming through, the 21, and this 40. I think ultimately the markets meet at this 40-month moving average, and that's where we ultimately find at least a bottom. If nothing else, we probably get even more consolidation. I think we could spend the rest of this year trading in this pattern. I'll show you where these values come in at here in a minute. They're quite a bit lower. It's around 38.25 roughly on the S&P. So most of the downside has been realized at the moment. The only thing that would change that outlook is that we were to the thing that would change the outlook is if we start to see a big deceleration in these PPMs. Right now, we're seeing all the PPMs here on the screen. They're actually starting, they've all penetrated first, second derivatives. So we're definitely rolling over, and I'm going to draw in a pattern that I think we'll see here from the standpoint of what's going on. So what we'll see here is this 10-period moving average is starting to roll over. The 21 will roll, and then we'll get a crossover. And this is what I was talking about, this angle of attack. It's kind of hard to draw with the mouse, but this will put us up in this level here, 3,800 from the standpoint of what this pattern is likely to come up with. And maybe then we get all this stuff to happen. We get some kind of, I know this is kind of, we get some kind of pattern that sets up from here that would ultimately, the bars would trade in this range down to this moving average, and then maybe even go down below it, and then we would see a rebound. But I think ultimately there's just going to be a giant consolidation set up. And this is, let me just draw a couple things here because we're talking a long-term viewpoint now. This is the, and I'm putting the year markers in. So this is the beginning of 23, and just trying to, these are rough marks, right? But you could literally see a very broad range, no new ATH or all-time high, nothing for the next couple years. And by the way, that does not mean that we can't have, there's going to be a ton of money to be made during this time. So it doesn't mean there's a disaster, but it looks to me that we're going to get this really big consolidation. There's still probabilities of the markets going down to around 3,800 on the basis the S&P, and that's going to happen over time. Nothing's going to change. The Fed is going to have to try to control the inflationary scenario, and I don't think they're going to have a lot of luck doing what they're doing right now. They really can't think this is the right thing to do. I mean, it baffles my mind actually looking at how things are set up here, that this action that we're seeing them today, and we basically already know what they're going to do, right? They made that clear. I've talked about this before. Until they start doing intra-meeting adjustments and surprising the market and letting the market know that they are serious about what they're doing, and they do it this way, market expectations, market sentiment, inflation expectations are going to remain high. And I think we haven't seen the beginning. I think you finally see massive food inflation after this growing season that we have coming into this year. Ukraine is one of the big corn and wheat producers. Their wheat harvest is like now, and they're not really having a lot of luck, as you would imagine, doing much of anything. I think maybe 25% of the output maybe is getting to market, getting somewhere. Not sure about any of those numbers. So that's disrupted. And then you've got all the fertilizer supplies, and you got other elements that come in that are going to affect our growing season here and other places on the planet. I don't think I had heard rumors that there was a lot of rain down in Brazil and in South America, so their growing season didn't go well because of weather, and they are in buying and bidding up corn, buying corn from the U.S. so they can export to their customers. So they're literally buying from U.S., bringing maybe shipping just straight from U.S. ports to wherever they want it to go. I don't think they have to take it back to Brazil to get rid of it, but they're literally buying in the secondary market, if you will, not in the primary market. And this is just going to continue to really cause just a lot of havoc, and especially in food and things of that sort. I would think right now that biofuels should be off the table. Stop taking corn and making crude oil with it. Drill a couple more wells, right? That would make more sense than doing biofuels. And in the end, the biofuel, I believe, you can correct me if you know, burns much dirtier than just normal crude oil. And in fact, WTI is some of the best oil on the planet. It's the cleanest oil there is. And you would think you'd want it, if you were worried about the climate, you'd want to use more WTI, not the Saudi crap and the other stuff that they're trying to buy. So, a lot of things don't make sense right now, but what else is new, right? So it sounds like I'm just looking at some of your comments here real quick so I can interact a little bit with you. So bear with me while I'm reading. Yeah, is it that time? Let's see here. Now they got Ed Yardini. He used to be our economist. See what Ed's got to say. Hang on.
Easing, and now I think we're going to see that the demand for goods is satiated to a large extent. Pent-up demand is satiated. We're going to see some strength in services. So I think the Fed is actually going to accomplish a soft landing. I'm not in the recession camp.
Ed, I wonder, though, if this doesn't capture the potential for higher services inflation that's coming. It almost feels like we're going to be in a Twin Peaks situation where we had the goods spike, and that was one thing. But how do you get rid once it's embedded? I mean, look at HCA's results the other day. Health services inflation. Look at what everyone from Tupperware to Lyft has said in the past 24 hours about wage inflation.
Sure. Yeah, I think you're making a very good point, a very important point. I think on the services side, the main trouble is going to be on rent. As we know, rent inflation right now is quite elevated. New leases, by some accounts, nationally are up 12 to 15% on a year-over-year basis. With a lag of about 12 to 18 months, all those new leases get into the pool of leases, and we'll see that in the CPI. My forecast is that the consumption deflator inflation rate will probably peak within the next few months at 6 to 7%, and then I think it's going to come down to to something like 4 to 5% by the second half of the year. So I think we will see a peak. It's still going to be high. And then next year, I think we get down to 3 to 4%. And the year after that, 2023, I think we could actually get down to 2%.
You know, Ed's still not any better he was when when we were at Prudential. Anyway, yeah, the soft land. See, this is the view of the world, and I hate to be such a contrarian. We've actually turned south now. We're printing 66 handle on the S&P right now. I'll put the level 2 up above me here while I'm talking. But this is what everybody's talking about, folks. Is they're talking about literally, you know, everything's going to be fine. This is it. You know, it's going to be better. I don't know. I want to be wrong here, but I don't think it's going to be better. I think we have a huge food is going to get worse, more expensive. I talked to a fairly big distributor, or not distributor, purchaser, wholesale purchaser of meat, and about 2 weeks ago, and I'm one of those, I'm always doing my own surveys when I get out into the field, and I try to find out as much as I can about what's going on. And the reality is that things are perceived to get worse from the producer side, and producer prices are not going to go down. You can take out food and energy all day long, but in the end, they're the critical part of everything that we have to have. So, you know, I like Ed. He's a really smart guy. Both those guys are on there actually are my seniors, which is saying something. And, you know, I just don't, I'm not sure I see it that way. And I think if anything, if inflation does come down, and I've said this before, the only way to get inflation to come down is to cause a recession. You know, we just had a 1.4 negative quarter. And if we get another quarter, guess what? We're in recession. 2 negative quarters, we got recession. And does it go on from there? We'll have to see. So let's do something. Let's see here. A few more minutes. I want to just chat around here, look at some of your comments. And I agree. The soft landing comment was really funny. Use Russian vodka. Yeah, it probably burned pretty good. The 150 stuff, right? Yeah, IWM is dropping. Let's go over to this other screen here for a second. So Russell down right now 0.69. We're still slightly positive on industrials. We're slightly positive on the S&P. Composite down 0.3 now. So we're starting to sell off. Let's bring up the NASDAQ futures here. And that 10-period moving average, this is interesting because the PPM1 is at a 0.71. It's trying to stabilize here, but I believe it's going to end up accelerating back down. PPM2 is driving things at 0.72, and these are big trends, folks. We could stabilize here, but even if we stabilize, it's going to take some period of time, like between 5 and 10 days of stability to get things to go. Didn't talk. I haven't been able to cover the. Let's just put up. Let's just bring up WaveTech here real quick. And I did see a question on the chat line. Somebody said if they get WaveTech, do they need to get the indicators? It really depends on what you're doing. If you're just managing some portfolios, 401ks, stuff like that, WaveTech's going to be fine. If you're doing any kind of other trading and fine tuning of trades, then you probably want to get the indicators. So let's take a look here. And this is something that when I go to the all stats page here, we're not getting any traction. And I've talked about this a lot, is that what we're seeing here from the standpoint of the traction on the database is minimal. But if I go over to, we look at, this is Research Weekly, there's two sectors that are long right now in our modeling. Energy, which went long on 11/30 of 2020. If you've been hanging around this channel for a while, you'll remember me screaming about energy and financials back in the fall, actually November, December of 2020. Everybody told me I was crazy. The markets are going to go back down, make a new low. We know the rest of that story. But the point is that these were the big sectors. Well, we've been long 359 trading days now on this energy complex, up 85%. If I brought up our other platform, if I brought up, I will bring it up on the other screen. And so we took XLE. So if I go back over here and we put XLE back in, this is the monthly XLE. You can see it's just screaming. Matter of fact, the PPMs are just accelerating. This is a secular trend that's happening here. And these the secular trends are accelerating, and secular being a monthly chart. And I'm just bringing stuff up on the other screen while I'm talking to you. Let's go real quick here. I think yeah, here we go. It's time for, I think it might be time for Powell here. Yeah, we got 1 minute to go. So let's watch this together here.
Of maybe 10 points higher in the S&P. There's two problems for the markets right now. First, it wants to be convinced.
So I always tell everybody, if you watch CNBC, you can watch it like we are right now with zero sound, and you can tell whether it's a good day or a bad day. And you know, look at what, you know, we're just bounced back again, but they're smiling. You know, if it's a serious day and it's down, they're going to be, you don't even have to see any of the quotes. Just look at the people talking there, and that'll tell you. All right, we got a spam bot in here. Let me see if I can get rid of them. All right, I got rid of the spam bot. Okay. The trolls are one thing, the spam bots are something else. So, yeah, so let's flop over here. So, I don't know, are those delayed quotes? Because I'm looking at 71, S&P 4177, and they're showing, you know what? I think I know why. Hang on a sec here. Now it's here we go.
For the first time in a couple of years. Before I go into the details of today's meeting, I'd like to take this opportunity to speak directly to the American people. Inflation is much too high, and we understand the hardship it is causing, and we're moving expeditiously to bring it back down. We have both the tools we need and the resolve that it will take to restore price stability on behalf of American families and businesses. The economy and the country have been through a lot over the past 2 years and have proved resilient. It is essential that we bring inflation down if we are to have a sustained period of strong labor market conditions that benefit all. From the standpoint of our congressional mandate to promote maximum employment and price stability, the current picture is plain to see. The labor market is extremely tight and inflation is much too high. Against this backdrop, today the FOMC raised its policy interest rate by a half percentage point and anticipates that ongoing increases in the target rate for the federal funds rate will be appropriate. In addition, we are beginning the process of significantly reducing the size of our balance sheet. I'll have more to say about today's monetary policy actions after briefly reviewing economic developments. After expanding at a robust 5.5% pace last year, overall economic activity edged down in the first quarter. Underlying momentum remains strong, however, as the decline largely reflected swings in inventories and net exports, two volatile categories whose movements last quarter likely carry little signal for future growth. Indeed, household spending and business fixed investment continued to expand briskly. The labor market has continued to strengthen and is extremely tight. Over the first 3 months of the year, employment rose by nearly 1.7 million jobs. In March, the unemployment rate hit a post-pandemic and near 5-decade low of 3.6%. Improvements in labor market conditions have been widespread, including for workers at the lower end of the wage distribution, as well as for African Americans and Hispanics. Labor demand is very strong, and while labor force participation has increased somewhat, labor supply remains subdued. Employers are having difficulties filling job openings, and wages are rising at the fastest pace in many years. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in March, total PCE prices rose 6.6%. Excluding the volatile food and energy categories, core PCE prices rose 5.2%. Aggregate demand is strong, and bottlenecks and supply constraints are limiting how quickly production can respond. Disruptions to supply have been larger and longer lasting than anticipated, and price pressures have spread to a broader range of goods and services. The surge in prices of crude oil and other commodities that resulted from Russia's invasion of Ukraine is creating additional upward pressure on inflation. And COVID-related lockdowns in China are likely to further exacerbate supply chain disruptions as well. Russia's invasion of Ukraine is causing tremendous loss and hardship, and our thoughts and sympathies are with the people of Ukraine. Our job is to consider the implications for the U.S. economy, which remain highly uncertain. In addition to the effects on inflation, the invasion and related events are likely to restrain economic activity abroad and further disrupt supply chains, creating spillovers to the U.S. economy through trade and other channels. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we're strongly committed to restoring price stability. Against the backdrop of the rapidly evolving economic environment, our policy has been adapting, and it will continue to do so. At today's meeting, the committee raised the target range for the federal funds rate by a half percentage point and stated that it anticipates that ongoing increases in the target range will be appropriate. We also decided to begin the process of reducing the size of our balance sheet, which will play an important role in firming the stance of monetary policy. We are on a path to move our policy rate expeditiously to more normal levels, assuming that economic and financial conditions evolve in line with expectations. There is a broad sense on the committee that additional 50 basis point increases should be on the table at the next couple of meetings. We'll make our decisions meeting by meeting as we learn from incoming data and the evolving outlook for the economy. And we will continue to communicate our thinking as clearly as possible. Our overarching focus is using our tools to bring inflation back down to our 2% goal. With regard to our balance sheet, we also issued our specific plans for reducing our securities holdings. Consistent with the principles we issued in January, we intend to significantly reduce the size of our balance sheet over time in a predictable manner by allowing the principal payments from our securities holdings to roll off the balance sheet, up to monthly cap amounts. For Treasury securities, the cap will be $30 billion per month for 3 months and will then increase to $60 billion per month. The decline in holdings of Treasury securities under this monthly cap will include Treasury coupon securities, and to the extent that coupon securities are less than the monthly cap, Treasury bills. For agency mortgage-backed securities, the cap will be $17.5 billion per month for 3 months and will then increase to $35 billion per month. At the current level of mortgage rates, the actual pace of agency MBS runoff would likely be less than this monthly cap amount. Our balance sheet decisions are guided by our maximum employment and price stability goals, and in that regard, we'll be prepared to adjust any of the details of our approach in light of economic and financial developments. Making appropriate monetary policy in this uncertain environment requires a recognition that the economy often evolves in unexpected ways. Inflation has obviously surprised to the upside over the past year, and further surprises could be in store. We therefore will need to be nimble in responding to incoming data and the evolving outlook. And we will strive to avoid adding uncertainty to what is already an extraordinarily challenging and
Okay, I can't handle it anymore. I'm not going to fall asleep on you guys. But yeah, I'm just looking at some of your comments. I couldn't agree with some of these. Really good. And Christoph, yeah, that fade trade always works. Made a lot of money over the years. And it's always on the big reports, especially anticipated for weeks to come. So yeah, let's talk a little bit about this here. I'll move to the other side of the screen here for a minute. I want to be able to watch the price action here, but you know, really I mean, I think somebody said it perfect. That Powell's job is to deceive the public and claim that we've got this, we got it under control, we're going to do the best job for you. Meanwhile, it is obvious to even the most casual observer that they're not doing anything. We're not getting anywhere close to making any changes with inflation, and I had one of my very first managers in the business when I started in the brokerage business in 1979. He used to always say, hope is not a strategy, right? And that's what I think they're operating on. They're operating on just pure hope that somehow things are going to get better. And that's going to be probably not a good strategy. And I just think that we're probably likely to see things that we never thought we'd see. We've already seen that, right, with everything that's going on. And, you know, the market traded down to 50 and back to 75. So we're getting these 25 handle swings. But the liquidity is even worse than it was earlier. Now, you know, if you watch the level 2 on the left, it can't even, it's supposed to stay centered on the last trade, but it just went from 66 to 77 and then back to 72. I mean, it's random. I mean, these are kind of areas, if you're trying to trade in this and day trade, you're making a big mistake. It's not as bad as the NASDAQ. If you want to see, let me show you something completely stupid. And I'll just switch this over to the NASDAQ. And if you look at this liquidity, there is no liquidity in the NASDAQ futures. There's 1 and 2 contracts on the side, and it just randomly jumps everywhere. It's impossible to even have any context when you're looking at that. So I'll go back to the E-mini June futures on the S&P. But even then, right now, they're trading pretty much like what those are. But let's try to get looking at some of my notes here. after watching the Fed, I think what we're likely to see here is just continued uncertainty. I think I will be doing another video tonight. We're looking at what, hour and 15 minutes to go to the close. So let's move on. I don't think we'll keep an eye on what's going on. We're back at 87. We printed, now we're 37 handles higher off of the print low. That's 5 minutes ago. So good luck if you're trying to trade in here. So now we're just printed all the way up to 90. So we went 40 handles in probably about 6 minutes. So anyway, yeah, so volatility for sure. Let's go ahead and take a look at some of these things out there. Yeah, I don't know, Antonio, about any 10,000 prediction, but maybe I said something a year ago or so that there could be some crazy numbers in the market long term. Who knows? Not sure what you're talking about there. Yeah, so just looking at some comments here real quick, just to interact here. Yeah, I'm just looking here. Lack of liquidity. Let me explain that. That's like one of the most important things. Liquidity is not volume. Okay, let's get that clear. You can trade. What we're seeing right now is, I mean, yeah, you can't. I mean, this is absolutely crazy because it was down to 85, and then it printed up to 93. But this is what liquidity isn't. It's not one or two contracts on a bid. You want thick, what we call thick spread, thin spreads, lots of size. So you would want, I remember trading this thing and there's 200 to 300 contracts on every bid ask. Sometimes there'd be 500, 700, 800 in a normal trading day. Right now we have, you can't even figure out what it is. It's 10 or 11 on a side. That's why we just went all, look at this. We're going vertical all the way up to this new highs. We're shooting right up to new highs. So who knows what Powell said? Maybe you folks are watching this. This insane move that we just had all the way up to 42.11. And one thing I would be watching here, 42 R2 is 42.22. That would be an absolute given to get short up there at that level. But this is pretty insane. So let's recap this. At 1140, the low was 46.75, and at 1145, the high was 42.12. So we went 60 handles in 10 minutes. So I'm just looking at some of your comments. I love it, folks. Yeah, I mean, I guess the algorithms are picking this up, right? And there's no liquidity, so a few big orders and they just run this thing up. And this is what I was talking about. A 200 order from an institution right now would run this thing into a new high on the session. And we're not far off from doing that. We're almost there. Yeah, this is just crazy trading here. So 75 basis points, not something. Okay, thanks for you guys watching that stuff and keeping me in the loop here. But this is, yeah. So somehow that's bullish, right? It's not, folks. This is just intraday markets. This lack of liquidity or the size on each. Look, there's 519 for sale right now on the level 2 on the far right, if you're looking at that. So we just got 542 at 42.10. That's the biggest offer we've seen all day. And they just took it out. I mean, like it wasn't there. And we went into a new high again. Look at this, 16, 17, 18. Here comes 22. There's 22 print. That's R2, 23.75. Absolutely crazy stuff here, folks. 27. I mean, this is the kind of surge you can jump on this thing. It'll come back in, but who knows where. 28 prints. 28.75 prints. 29 prints. Another new high. Absolutely. They took out a 500 bid there. I mean, they jumped all over that. 500 offer. Here's 30.50. So in the last 15 minutes, we have now run almost 180 points, we'll call it. But 82 points. Yeah, I would definitely be a seller up here. I'm not trading at the moment, but the yeah, this is definitely a moonshot on air. There's no substance whatsoever behind this rally. What you look for? Let's do something here since we're into watching this right now. What we look for using. So here's 34. We don't do any shorts until we start to see crossovers on the 1, and once that starts to happen, I'll show you a pattern. Let's do some stuff that we usually do in the trading room here. 1 second here. I just want to bring up. Let me reset some of these charts and get them set up here. Yeah, so what we're going to look for, and I do this a lot on the live room. We'll take a look at this right now. I've got the trading view indicators up here, ppm 1, 2, and 3, and you see we're starting to fade a little bit here. What we look for on this 1 minute, let me get to these. Let's go to thin bars here on both of these. So what we're looking for here now we're getting the crossovers on the 1 right now, so we're already starting to get crossovers, and we still need to get these top linear regressions. This is the WaveTech Webs, and this is one of the indicators, and this is one of the best pattern tools that we have as far as intraday trading. So we've got crossover. You see these lines crossing here. You see my cursor, and what we look for is a roll back to the 10-period moving average here, 42.10. You can't really trade this because of the lack of liquidity, and the lack of liquidity is just no size at all on either one of those, on a bid or ask. But we'll see how this trades. Let's go through a potential trade sequence here. So we're starting to get the webs to crossover. We got full crossovers now, and we get something we talk about a lot. It's called a veil, and it's forming a veil right now. So we still have resistance around 28, 20, 29, and it should roll back to the 10, probably get a bounce here around the 42, 12, 13 level, right in that level and see what we set up here. So we'll just have to watch a few minutes of time to see if this is how this pattern is going to end up setting up. But this right here, I'm going to change the scaling just a touch. This is what we call a diamond bottom and a rounded bottom right here. So the web set up this little move up here. Of course, this is 1 minute graph that we have here right now. And we're just watching this form. There's still a bullish connotation to this because the webs are still going up in the pattern. So we haven't got a sell signal just yet. We just got some downward projections on this right now for a move back to 41.81. We'll see what happens. This is your pivot, 42.06. This green line here is the pivot in the pattern. We take out 06 and we'll roll over to the 21.40 period moving averages. So let's watch a few minutes of this. So we're still consolidating here. PPMs are trying to turn up here on the 1 minute. The 5 minute is not started any crossovers. That's when we know we have more of a larger pattern. You'll see these lines here. There's green, red, and blues. And those are the pattern finder. And there's a mark there. Let me do something here. I'm going to show you something really cool. We'll put we're going to show the pivots. So these pivot points are going to help us to set up stops and things of this sort. So we're printing. So this, what looked like crossovers here, the primary lines continue to move up. So we're still getting prints up. We're now at 42.40. So whoever who called the 42.50 coming, here it is. So we're still waiting for some kind of signal to get short. This is still in a bullish mode at the moment, and we're not getting the crossovers on the 5 minute as well. So this will be interesting to watch with you folks. And you can see there's still no liquidity here. I've got the level 2 over on TradeStation over here, and we got TradingView up over here. Just got a new update on the 1 minute. This is the final minute before the 5 minute updates, and this is what we watch for, is to see what kind of updates and what happens. We're starting getting a little crosses again on the 1. The PPMs are trying to fade, but they're still bullish. The 10 period moving average is now up at, right now we're all the way up at 41.90 right now. I'm sorry, that's the wrong number. I got to get on the right chart. 42.27 is that number right now. And we're still got a bullish pattern here on the 1. So we have not got a negative turn as of yet. We're just made a new high again. And then one of the things you'll watch over in the far left, you'll see we'll print a new high and then they'll drop 300 or 400 points. That was probably a significant high. We even though the lack of liquidity, we went from 44 down to 30. What was the low here? Down to 37. But we're right back up there again because this is the volatility so high. But we'll continue to watch this just for a minute, see if we can get a turn here on this market. But I'm going to flash over to the S&P right now. And let me put that up there real quick. I want to get the market grid numbers, because now we're above the 10. 42.27 is that number. We're printing 45 on the futures. We're looking at right now, R3 is 42.55. So we'll see if we get a rejection off of those levels. So let me bring both of these back up again. Still got what we call a rope in the 1 minute here. We just printed another new high. We're still bullish on this. So 55 is our 3. So we didn't get rejected off the 27. We continue to move much higher. Yeah, so we're getting the crosses on the 1 again. We'll probably come down to the 10, which right now is at 34. We're getting crossovers on the 5, so we're getting very close to setting up a top. And this type of pattern that sets up will be very interesting. So we printed, what was the high print here? High was 46.25. Got crossovers, come down to you're seeing the PPM 1 and 2 here. Our 1 has already crossed this first second derivative. That tells us, when you see that, that tells us we're going to test the 10. It's already doing it as I'm trying to explain it to you. And so what happens from there is the pattern that sets up on the 1 will tell us how this 5-minute pattern is going to set up. I'm going to make the 5-minute fat bars here. And so we're starting, there's something we talk about a lot. It's called a veil. And this is where all the linear regressions and the webs will start to form a veil pattern on top. And that's usually where you'll get the bottom. This pivot here that was on here was down here at, let me see if I can get that number. At 4206. That's still a good pivot number. So we're getting a downward bar, starting to get some crossovers on the 5-minute right now. So here we came right down to the 10. There we go. We're just about to print the 10. We should get a bounce off of this level here around 39.50 right in here. And then this veil is starting to set up. And this, we usually will trade into the veil about to maybe 45, 47 is the potential. Minimum 46 to 47.50. And then we'll start to see if we can roll over. We're getting little crossovers on the 1, but this is typical. We'll trade up into, even at this lack of liquidity, we should still see it move up between 45, 47, and then we should get a reversal back down, challenge the 10, possibly get down to the 21 period moving average, which is rising at 42.19 at the moment. But the 5 is, we're going to have to cross through. I'm going to bring up this up on TradeStation just so you can see it for a minute. Here we are back in that 47.25. This is where the money's made. And I got the market grid here as well on TradeStation. That up where we just traded up to R2 right into that 47.45, getting rejected from there. And you see the crosses here on the 5. So this next probably 2 minutes is where we're going to be able to decide whether we're going to come back at least down into this level here, which would be the 19 level, and the possibility of going down a little lower. So this is where the money will be made right here. So we're still tagging right along this the upper band of where we traded, but the veil is setting up. And right now we look at R2 is 50, R3, this is on a 1 minute, 51.50, and then you're looking at 48.25 is R1, and we're trading right there right now. That's been the high. So they may punch out another new high here, but you can see the crosses happen, and then here we go, new high, but we're still getting the veil, so we're waiting for the sell signal yet. And one of the things you look for intraday, and on a crazy day like today, the volatility is so high, you'll see we just print another new high, and then you'll see a huge rejection off of that new high. There's another new high, so there's just no sell signals yet. There we go. Now we're starting to get, now we're getting that little bit of that rejection off of that new print high, 52 down to 57. So the next 5-minute close, we're going to stay with this for a few more minutes, folks, just so we can talk about some of these patterns that's setting up. And then we'll, for the last hour or so, I'll go through some stocks and things like that. And we'll set up the final hour here. But here we are, 79 handles at 49. We're finally starting to get that secondary crossover into the webs on the 1 minute. So this is where it starts to set up. Typically, you'll be able to, I'm going to flip back to the this chart here. We're sitting right on that 10 period moving average. And what we're looking for now is a potential for a move down to test the 21. So we should, if we break the 10, which is right now at 45, we break 45, then we should see a move down to the 32 level and possibly get a full-blown rollover. We're getting crosses on the 5-minute now. So here we go. We've just taken it out, and we should start to see. So that pattern that I was talking about is what's set up, and this is a lot of what we do in the live room, folks. Is this was the pattern here. I said we'd rally back into these webs overhead here, and now we're getting a breakdown. So we should get at least probably a move down to this rising 21. Then we probably get another secondary bounce, and if it's going to be a top, we're going to continue to see these webs unfold on top, and then the next leg down will start to move down toward this next level. So let's just see where we're at here. In theory, we should stay under the 10 now. We get sandwiched between 10 and 21, and every minute we start to get, we've got an outside reversal now on the 5-minute. So we're starting to see more signs of top. And those of you who watch my channel for a while know I always look for clustered ideas. So what we're seeing here right now is that we've got an outside reversal on a 5-minute, and we're getting crossovers. We're starting to get the veil set up here. We should end up at least testing the 21 before we bounce. That's going to be at, let me get that exact number, 34.20, 25. And the 5-minute bars turned positive. Okay, we just got the 5-minute update. So that neutralized that reversal down. We didn't get a negative close. Now you can see we're still getting, they're going to retest the highs here again, potentially. And then we're starting to see a veil set up on the 5. So I think what we're seeing here, folks, and we can, if we start to hold this level, we take out this low over here at 37, then we're going to start to see some prints lower. And I thought we might get down to 21. We fell short of that. We have a new Fibonacci projection right now on the downside for low target 1, 37, 31, 27. This stuff updates real time on your screen. You'll see these dots here. So over on the far right, we've got that number setting there. I know it's might be kind of small on your screen, depending on the monitor that you're watching on. But this is going to be the critical point as we come into this final hour. The 5-minute, let me draw in something, because the 5-minute is still bullish. It has not really gotten any kind of real sell mode of any any sort yet. You can see here, I'm just drawing some lines on this. You can see these crosses. What starts to happen, we start to get crosses over, then we can see the market roll over and come into, down here into this 10 period moving average on the 5 and ultimately maybe the 21, which is quite a, not tons down here, but it's quite a ways down. I'll get those values in a minute. And this freezes the screen when I put this up. So we're just kind of finally kind of stalling a little bit here. We're starting to get some downward pressure. Here we got a reversal going on in 1 minute. So 37 is the mark that we're looking for a reversal. But here we go, negative on the 5. And we'll spend another 5 minutes or so. I don't know if I'd cover those puts just yet. We see a lot of these Fed days where you get a big bounce like this. I mean, everybody comes to their senses. I mean, yeah, so we'll just continue to watch. We should challenge this 21. It's finally coming into play. The downside projections right now, I said 37, 31, 27. So, and the nice thing about all these indicators, you start to use them as there's a potential over here on the 5 of coming down to this key level right here around 42 handle even. That would be a big move if we can get that. But we're still got some upward bias on this. I'm going to draw this in so you folks can see what these things look like. Those of you that already bought the indicators, some insight. But see how all the regressions are still positive here, and we're even seeing the upper ranges still turning up. So we have not turned negative yet on the 5. And until we start to get more of this crossing, you should start to, I call these the webs because they end up looking like spider webs. And so, but we still have a bullish formation. All these regressions are telling us there's still strength in here. We're looking down here below at the PPMs. They're still very strong, and everything's still in an uptrend mode at the moment. As I said that, I think we printed a new high. I was saying that. So we're still seeing this pattern unfold. I've got so much, we've got some time invested here, so I want to just stay with this just a little bit longer. Yeah, so still hanging out here around the highs. The algos are driving this thing. They're all over it. So it's one of those. Remember last Thursday, we printed up to some crazy numbers there, and the markets wouldn't stop going up. And then right after, as we came into the close, they sold them off. And then overnight, they went from, I think it was right here where we are again, 42.60, all the way down to a new low, 41. Here's another new high. So we're still, the thing that is interesting about these webs, especially in the 5 minute here, we printed a new high, but we're still getting structuring of what a top is forming, even though we're getting slightly higher highs here. We have not gotten a sell signal as of yet. There's 57, another new high. Yeah, these algos are all over this thing today for sure. So we printed 59 and then a rejection back to 54. It's hard to tell whether it's just lack of liquidity or if there's really some selling coming in. That might have been it. Remember, we had the R3 is at, I'm forgetting the number now. R3 over here quickly is R355. 81 is the RTX number. So we're trading right around R3 right now. See if we can get any kind of rejection off of this point. Yeah, Daniel, I see your question. How do we know, you know, if you're selling that, you have to, if you're somewhere else, you have to buy the dollar to buy the U.S. market. So you got to trade in dollar terms. So I don't know how we'd figure that out. So we're still, this interesting pattern, folks. We're getting this is what we call a diamond top. So you have to be very patient, waiting for, we may not get a top to form here. We're right printing back up at the highs. It's so thin, the algos are able to just dominate this market. There's another new high. Print all, look at that. Wow. Just a big blast up to 62.50. I'm going to go over just period. We're up 90 handles now. So think about this. We are 110 handles from this low that we had, actually a little bit more than that. This was a 41.46 high, just a vertical move. And so still watching these patterns set up, but 62.50, just keep printing these new highs in this pattern here. So we're not really getting, you can see this is, even though we're making new highs, this is more or less a pattern that's trying to stall here. It's edging out new highs here, but we're still looking for a sell signal, which we have not had. Jeff Westbrook, I believe he said that. So we printed another high, 65. Still getting this this diamond formation trying to come in. I suspect this thing just going to get the rug ripped out. So still grinding out this pattern. I'll tell you what, we're going to spend 10 more minutes doing this, and then we're going to go and look at some other stuff here. And yeah, David, I said yesterday in the live room that over 30 you buy the market on the VIX, under 20 you sell. And that's exactly what has been happening for sure. Yeah, I'm sure he's dovish. Yeah, so 65 still the print high, so maybe we're finally starting to see some size, a little bigger size show up on some of these bid offers right now. So liquidity is coming in. A lot of times as we come into that final hour, all the players of the day are starting to make their final bets, I guess we'll call it. The 1 minute here is attempting to set up a top. We're getting crosses on the one. We're going to have to trade down below around 56 on the 5 minute to get the market to actually turn. And right now, this is that thing I was showing you just a few minutes ago. These linear regressions are still strong up. There's no way you get short into this kind of position, especially on the 5 minute. We're starting to see PPM starting to stall a little bit, but they're big numbers. 1.7 ppm on ppm1. So there's not a lot there to look at. Here's another new high. So there's no way This just continues to stair step this up. Here's 70, 50. Let's go look at a couple of charts here. So all of a sudden we're getting up toward the RTX number. I want you to look at what's happened since we started earlier today. Let me move out of the way here. But since we started earlier today, the PPMs are now turning up. We're at 0.43, 0.33. So we've actually turned up pretty substantially here on this rally. We're up 100 handles, up 2.42%, 42.70, and it just keeps rocking and rolling. If we went over here and just watched the, we just printed yet another high, and this pattern is setting up. I still feel like we're going to get some kind of decent rejection in the last 20 minutes or a half hour. We'll have to see how that sets up. Let's take a look here. And we're also seeing, look at the 10-year down at 291. Let's look at the yield curve real quick. Yield curve steepening, that's what they want. So everything, this is better. This is better than Goldilocks. This is the perfect scenario. Everything's printing up 2.46. $72.25. So this is what I would look for here on this pattern. We have to trade under 50, 56 to 53 on the 5-minute to actually get this chart to turn. And we're finally getting some selling coming in. You see the crossovers on the one over here on the right. Let me get out of the way. And you'll see we're crossing through at STX on the 1 minute on the chart on the far right. And we're trying to get some crossovers here on the downside. 56 is the pivot number right now on the chart. Getting a bit of a reversal finally on the 5. Let's go back over here. You can see it defined here. PPMs are rolling. Everything's starting to roll. We just took out the 10 on the 1, heading for the 21. And so we're starting to finally get a roll. Here's 56. This is the number I was talking about. This is where if it supports here, if we get a decent bounce, it could hold. But we're coming right now. This is the final minute into the 5-minute bar, and we're at 20 seconds to go on the update. And it looks like if we stay down here below 56, we're trading 56, 55. If we stay right here, we're going to get we're going to get a reversal, and then the next bar will tell the story as we set up coming into the close with about 6 bars to go to the close from a 5-minute. There we go. We got the update just now, and still got some pretty positive patterns. That PPM just ticked up here, so we still not getting any kind of sell signal here. Just more consolidation. It looked like there was going to be a shot here. We went from 56 to 67, 68. So it just reversed off of that update. You can see the PPM turned up, telling you, no, we're not fading yet. So we're still got the upward slope on everything is still got us in the upward slope. And these webs, like I said, they're with this flow underneath here, this is just a real positive pattern. It's still trying to finally maybe put a veil in. My expectation, if I were to call it right now, we come into the close, we'll go ahead and do some other things. We'll flop back and forth, but I think we probably fade it maybe back to maybe some of these levels here. The 10 is around, it'll be around 40, 45. We get under 45, then you could see a move back quite a bit lower. Here we are back at the almost at the 56 level. So we're starting to get a little negative crosses. Everything's finally starting to come into play. It looks like this is what is forming right now is a diamond top on the 5. And typically when you get that, it's pretty substantial. You still have the upward slope on the 10. You got a lot of stuff to watch for. Intraday trading is very intense when you're trading here. And in the live room, we actually do live trades and things are setting up there. So anyway, let's go bounce around, take a look at some other stuff. I see some chatter on about Bitcoin. Bitcoin up almost 2,000. It's a risk on, risk off type affair. I've been talking about that a lot. Let me blow up this section right here. So you can see it. We're taking out the RTX level. We're actually above the 21. PPMs are all turning up. So all of a sudden, everything's going to be wonderful, and everything's priced in. And isn't it wonderful? Look at the S&P up 700. I'm sorry, the Dow Jones up 700, S&P up 93, and then we got NASDAQ up 300. Russell finally up 2%, so Russell came back alive as well. All right, let's take a quick look at the weekly on the Bitcoin. Now we got PPM 1 at 0.53, so we're getting some bids that come in there. So definitely trying to make a turn. These Fibonacci numbers, I haven't mentioned to them. These projections above are still valid, by the way, and they're way up at 62,000. So pretty interesting. Yeah, Jeff, I don't argue with you that Powell won't let the market correct until after the corrections, but I wouldn't count this one and done and everything's rosy just yet. I've seen a lot of reactions like this only to see it fade the next day. And this is the third day up in a pattern. And even though let's go back to the ES here. Even though we're looking at weekly right now, SR3 4270.75. So we just hit 4272. So we just did R3 weekly. I guess it's possible that we start to set up a weekly low at some point, but there's still pretty major resistance. And I set up in the video I did the other night, I was talking about the monthly ratio as well. We're looking at right now, excuse me, R1 on a monthly 4242, R2 is 4370. That's not another 100 points to the upside, is not out of character at all of this market. But we're still we still have that positive PPM 2 in there, which is at 0.97, and that number is 4120 is your support. And that was the support numbers that I was talking about being major support at 4100 on a monthly, 4120 on the monthly. And so we printed down and we made a new low in this pattern down to 4056, printed 4093 back in February. So we've got a new low, but the point is that we're still kind of going to be, I think, dominated around 40. If we got up another 100 points, 43, maybe as high as 44. That would be about all you would expect. I don't see us just running off into a bull market and new highs. I don't believe that will happen. Yeah, Chris, I think you're right about that. That's exactly. You get some of these Fed presidents go out there and they just, Bullard's he's the front man for all of the misinformation out there for sure. Yeah, so they just came back in on the. Let's go over here. Yeah, so okay, this is a great pattern to show you folks, and I just want to bring this up here. This is the continuation. We get these etches. We never got the full rollover. We needed to close under the 56. We didn't. They're still buying them up here. The high at 72. Now we got a high at 73, 75. These upward slopes in the patterns here, you see in these webs here are telling you this thing is not done. And if you look at the PPMs, we saw that last 5-minute update over here. It just moved up. We just got another 5-minute update, and we're just getting crazy momentum going here. So this is pretty classic of those moves. So I just wanted to point out something. I talked about that fade trade, which happened off of the initial news. That's a 3 to 5 minute trade, maybe 10-minute, and you got to follow them with stops and do a pretty aggressive approach. We had about a 20-minute, 30-minute move. We printed the low, like I said, at 40. It's hard to believe these numbers, right? 41.46. And then just within the hour, now here we are at 73. We just printed a 75 high. So we got this little, this over here on this is a market grid bubble formation. This is a bubble bottom, I call them. They're different, but similar to they're similar to Bollinger Bands. If you've ever used Bollinger Bands or watched them, they get these big bubble formations. Well, this is a different calculations. Those are standard deviation lines, and this is based off volatility. So when volatility starts to increase and you get the bubble, typically tells you that we're about to make an inverse move or a bottom. And here we are trading right at 76. They're just big buy programs coming in right now. The algos are all over this thing. And so there's no way to get in their way. Looked like we're going to get a diamond top. That didn't happen. These dominant lines up through this 5-minute chart are what kept this bullish, never gave a bearish sign. Now, it's still subject to this rollover as we come into the end of the session here. Let me reset these charts here a little bit. So here's what's coming out of. I want to show you a couple things here and see if I can get this blowing up to the point where you can see this. But the pattern, the price projection tool was telling you right here at 12, that's 12:07 my time. So 25 minutes ago, it was projecting prices to go to 42.69, 42.82, 42.89. And then the algo came in and has re-upped its targets, excuse me, the targets now to 42.90, 43.03, 43.11. I don't think those get hit, but we're just printing new highs as I'm talking. So it's possible that this first one could get hit, which is 90. That's another 10 handles. Not even a big deal from here. But we're just getting these stair steps in the webs on the 5. We're getting another one. One of these will be the end, and we'll get full crossovers, but they don't seem to be coming anytime soon. Looks like they're going to try to print 42.90. Here's another new high as I'm talking here. And PPMs on PPM 1, 2 and 3 are turning bullish on the 1 minute again. Got positive objectives. Everything is looking positive here. And there was, if I could show you something, I don't know if there might be a way, if I can, to I'm going to try to zoom in. You know, I used to have a zoom. Yeah, so what I want you to see here, and I'll put the cursor here, but there was downside objectives here for the market to come down in this pattern. So we got these pivots. You see these red and orange pivots. So we got the pivots coming down here, and the pivots suggested 42, 57, 51, 47. The low was 58 in that pattern. So matter of fact, yeah, so it projected pretty close to where the downward pattern was. We had the 10, 21 period moving averages, and this is the 1 minute graph we're looking at. So I had to move that over to look. And meanwhile, on the 5 minute chart, we just continued. We're finally seeing some rounding over, but we're still printing. We printed up to 87, so we almost hit the 90 high. So it's just pretty insane movement here, up 116. Yeah, I can't imagine the guy who just paid 42.87 is going to be that happy. Maybe he's covering shorts, but here's another new high. So 90 is the objective on the 1 minute. Here's 88.25, getting pretty close. Sorry, this crazy market keeps luring me back into following it here. So here's a 90 print. Let's go back over here. There's the objective. This came in at 23 after the hour. 10 minutes ago was where that projection we just printed. Basically, there it is, 90 right there. That was the upward objective. We're just seeing this 5 minute just accelerate here on the 5 minute chart. Let me get off of this screen here, so you can see it, excuse me, a little bit better. But we've just been getting these stair-stepped on the webs, but the dominant is these upward shape on the webs. They're just very strong up. This is one of the stronger patterns you see, but we are finally maybe getting some, we hit that fib projection there on the 1 minute at 90. We're finally seeing a little bit of selling and some crossovers here on the 1. Let me expand that pattern so you can see it just a little bit. Now you see this formation coming in. So now we're already back to 83. So it came right perfect to this. You see these dots here. This was the perfect projection. And if we go over here to the previous projection over here, we were looking at 89.99. So perfect. And then this was an updated with the smaller dots. But now we got crossovers. Now we got finally something that looks like we're getting a turn here. We got 25 minutes to go. So, Mitty, is it hard to see these screens? Is that what you're saying? This might be easier screens to see. But we're getting this this pattern up here to maybe start to top out. But this is a bullish pattern on the 1 minute. There's still no sells here, folks. It's crazy. You'd think we'd get a rollover if we come into the last few minutes. Yeah, these algos are relenting, non-relenting, I guess, on this pattern here. Okay, Mitty. Yeah, those small dots are really small in that. I have an expanded chart somewhere, and it just take me a minute to change those a little bit. But yeah, let's take a look at oil. Crude's now 107 up 5. Yeah, that's bullish for the markets, right? Gold's up 12, dollars down. We're still trading 87s on the E-minis. They can't break it down. We've got 20 minutes to go here. So as far as the backdrop going, just looking at yield curve went back up to 10 basis point. It was absolutely flat last night, and we're just seeing it invert back very quickly. That's only 10 bips above, so the Fed does not need that inversion to happen, and so that's going to stay out of the news lines. But the monthly pattern came right down. I remember a couple of months ago, I was talking about, well, we should move down to the 21 period moving average. So we did that. That number's 41.21. We printed down to 40.50 and change. And now we've rebounded 140 points above that, 170 points above that. So here we are, still trading the highs here, folks. Just going back over here. Okay, now finally, this is a pattern setting up that there's going to be some confidence and maybe rolling over into the close. So maybe some profit taking in the next 20 minutes. Yeah, all this is based on, I guess, Powell ruling out larger interest rate hikes. Yeah, because you got to look at that being dovish, because they need to be a lot lower. So we printed 91.50. They're still just coming right at this thing again. We'll see if it can fail here. The 1 minute has still got a bullish tone. We're not really getting the crossovers we need to get any kind of sell signal. Usually pretty good at coming into this pattern here. I think if we can take out 82, we could see a pretty decent sell-off, maybe printing back toward 55 maybe. And it sounds kind of crazy, but I think we've got that kind of day on us right now, is that we can see this reversal. So we're trading down below STX on the 1 minute right now. PPM 1 is crossed over, got to cross its first derivative. So we should see some further stuff. We're seeing a little bit of algo selling right now coming in at these levels. So these guys are maybe taking some money off the table. Well, we just got a 1 minute reversal off of the SDX, and now we're trading right back up. New highs. Trying to make new highs here. There he goes. New highs. All right, here's our 82 break. So we managed to print a new high and got rejected off of there. We have 15 minutes to go. We need to get we'll at least get down to 76, the possibility of getting back to 55 here. Pretty insane rally for sure. Yeah, they just they get a little selling and they just come in and buy them back up again. Here's some algo selling coming in right now, folks. We're seeing some algos come in on the sell side. Can they knock it down? I don't know. There's small blocks, not any major blocks yet. Algo buying coming. There's a war going on up here. It's amazing, absolutely amazing run here. So there was other things I was hoping to do today on the live stream, but we're kind of stuck here watching this thing. Finally, on the 5 minute, we're trying to get a potential veil, but we're late in the game here. A lot of times I've seen after the close, here's another new high. After the close, we get a lot of selling coming in. And this will be interesting, folks. You've hung around me before, but in the live room, a lot of times where we're talking about is this last few minutes, finally seeing a veil set up on the 5 minute. So I'd be careful about being optimistic, thinking you're going to get more out of this rally tomorrow. I mean, 42.93, these are insane numbers. Still think 75, potential for a 55 in here and pull the rug out. Yeah, I don't know. Good luck with that. New highs. Draw buyers in tomorrow. Really? Okay. They're not going to draw me in. I'll let someone else do that trade. So here's the veil setting up here on the 5 minute finally, which is what happened about a half hour ago. A little more algo selling coming in. Actually, both sides are playing right now. I think we'll see a 75, somewhere in the 70 handle print, and then the possibility of lower. Now we're starting to get the veil on the 1 minute here. This thing's starting to roll over. PPMs are all crossing over to the downside. On the daily, though, they are better. Yeah, I don't think there's any. There's still some. I have this theory, or what I do every day is I'll let the market settle, and then I'll come up on the YouTube video tonight and tell you what I think after this action I've had. It's kind of hard to do analysis when you're in the heat of the action and the emotions are running high. It's not a good time. You need to step back from things and go from there. Yeah, I see Tanyi, one of my mentors said whenever you have a trade set up and you hit your target, by the time it gets to your target, you should not own them anymore. Don't get more optimistic after it hits your targets. So we're still getting a bid coming in here. There was a good chance for a roll, and they're still coming in here, folks. They won't let it go. Crazy. Yeah, I think 43.10 would be probably your best sell point. I don't think you want to be buying there. Maybe that would clear everything out. We'll do a quick review after this thing closes up with the cash here. So we're still getting a bid. Here we are back at 92, trying to print them right into new highs again. Here we go, new highs. Only good thing about the trading room, there's no delay. There's about a 20-second delay here. So what you're seeing already happened if you have a live screen. Yeah, delighted. You might be right. Might see 93 here, or 43. What a crazy run, up 3%. There we go. Look at that. Yeah, I can't even get my level 2 to, there it is, 99.75. I can't imagine buying 42.99 and feeling good about it, but somebody's doing it. Hey, Brandon, thanks for that. 2 billion MOC to buy. We're probably already seeing some of that already being played out. But yeah, I can't get a sell signal here. It's crazy. Reminds me of last Thursday. Markets reversed and went into a new low. Yeah, Moon Boys are buying. Yeah, there's Almost printed 4,300. They did 75 again. Yeah, I guess everybody buying into this soft landing. We haven't even dropped yet. How could we land when we're still in the air? Soft landing for the stock market or the economy? Yeah. Had a crazy market today, folks, for sure. But we kind of knew that, right? Yeah, so what the webs have to do is not going to happen today because there's not enough time. The 5 minute, somebody's asking about what they'd have to do is we just held all the support levels at 82, 86 numbers. They're starting to get some signs here that maybe we're going to get a little rollover. I really thought we would hold the previous highs and then maybe roll back to 75. That's pretty far-fetched at the moment. They're just solid bid, and there's very small blocks of the algos coming in and selling here, but there's very small blocks of buying. There's two-sided trade. Here we go, 4,300 prints, 4,301. Here we are, 02, 03, just panic buying almost here. Crazy, crazy. $43.03. Yeah, this is the same stair-stepping pattern that we had earlier on the 5 minutes. So at some stage, it'll just end and just collapse down. But we're 8 minutes to go. Have flash over here for a minute. Bitcoin up almost 5%, 39.7 up 1,700. Gold up almost 1%, 1885. Dollar down, 10-year 291. We're getting really close right now to R2, actually 4370, another 100 points to R2 monthly. That's probably going to be about your extreme there. So it could be another 100 points in on the upside here. Let me go back to the level 2, see what we're looking like. So yeah, little print down here. We're trying to get this veil set up here on the 5, but we'd have to print through right now 90. Let me get the right number. Yeah, we just got a 5-minute update. So I would say we're setting up the 5-minute veil right now. So that 43.03, that was the ultimate selling right there. That's where you want it. That's 10 handles are ready. So now here they're going to come at it. The key levels are going to be at 84 and then 75. You see the 1 minute's getting a veil setting up. Finally, everything's rolling over. Had to print over 43. I don't know if they're going to come back at it again. We'll see. Or you have to take out 84 to get any real material effect on this market. So what we got going here? About 3, let's see exactly what we got left in the session. We come back up, I'll do a little quick review and then we'll get off here. But I appreciate everybody hanging around today. Been a very interesting pattern. Yeah, I see Scott talking about the 20-day moving average. 21-day moving average is what I would be looking at. So here we are, printing down, not quite got to 82. There's some profit taking coming into the close, but not a lot. Yeah, so now you're seeing the 5 minutes starting to set up this veil. There was way back over here when we were at 59, it looked like it was going to set that up. We still had those upward. I remember talking to you about this upward slope and vertical moves in the linears. Now we're getting the bulk of the linears to cross and to roll. So it'll be interesting to see after the close if we don't end up printing 75 or lower. But that 43.03 number was an insane number. I mean, that was just total insanity. I would like to be the guy that paid that. Still getting a little algo buying coming in here, which is really interesting. We got less than 2 minutes to go. In fact, we have 1 minute to go starting right now. So this is the final minute of the cash. We'll go back and do some reviews and talk about a couple other things. So still bidding in here. Trade 96. This is a final minute or so. We'll see what happens right after the close. This tells us a lot about what's going on here on the close. Is if there's a lot of buying coming in, then that means the ETF mutual fund guys couldn't get enough done on stocks. They have to buy them. So here's 97 printed. That's the end right there, folks. That was it. So we'll watch the next 2 minutes for a second here, back to 92, a little bit of selling, but this veil is actually forming now. So this is probably a point whether you get, I mean, that's a pretty insane move that we just watched. You know, we're talking an hour and a half going from 41.46 to 4,300, so 150 handles. You know, I've been around a long time on these markets, folks, and I just tell you that this was probably, these type of swings like this, an intraday hour and a half swing of 150 handles on a market. And I realize we're at percentage-wise, that's still 3%, right? And we were actually, I believe we were negative on the session when that all happened. We printed slightly negative, but the overall range today was just completely insane. And a lot of times we get this kind of volatility. It you know, it could be a major bottom setting up. I've talked about this 21 period moving average get hit. If you recall back, if you went back and watched some of my videos on YouTube, I was talking about 3,800 being the number. Well, 3,800 was what the 21-month moving average was then. It's now 4,120. We printed through that the other day, and now we see this big rally. And the PPMs, I can bring that up on screen while I'm talking about this here. This is it right here. The PPM 2 is at 1.0. 0.25 is a trend, so probabilities of staying under this on a monthly level was very low. So I figured we'd get a rebound, possibility of an R2 on a monthly. R1, R2 monthly is what I was talking about. You know, here it is, the 4th of May, actually. And so much for sell in May and go away, right? But the 4303 high, 4370 is R2. So there's, like I said, there could be another 70 plus handles in here, and it's going to be interesting to see how this unfolds. So let's just go through a couple things here at the end of this session. So we're looking at, here's that declining 10, but all of a sudden we're still down 0.38. That number is 4230. I would expect we come into the range tomorrow when we get the market grid to update on the reopen. What you would expect to see is that they a move back maybe to 4260, 4240, and then this PPMs will start to turn. All of a sudden they look very negative. It takes one big day like this to turn everything. So we're starting to set up at the 21 period moving average right now, 43.44 on there. That's going to be an absolute extreme, but we've first a second derivative on PPM 1 and 2 have been penetrated. That tells us that we're likely to go to the 21 is what it's telling us. And PPM 3 was actually the first to start to turn yesterday. And all of a sudden everything was flat. I kind of blew that off as a nothing in last night's video, but we could head back toward that 43.90, could see 44.72 on the upside, which is the 200-day. So there's still some upside on this market. This is the third day. So I would look for a hesitation day. The other thing that just happened that we just watched, and as long as we stay above the, let me give you a number here, 42.81 level on the close here of the futures, then you're going to get an RXT sell signal. So you're likely to come in, probably print back to this 42.60, 42.40, come back into the pattern, and possibly maybe the PPMs turn back down when they come in tonight. But this was pretty much, I would say, overbaked, overcooked. You know, like I said, that 43.03 number even was pretty much overdone. It was just one of these buying panics. And to the moon boys, I think somebody called them, I forget what they called them, but that's pretty much what's going on here. So big day. We knew it was going to be a big day. I guess it was. Why is it always, in hindsight, why is it always when Powell talks, it ends up to be an up day? You know, I guess maybe that should have been baked in too. Maybe it was. I mean, they were already starting to buy before the meeting and before the announcement came out. So it's amazing to me, folks, been doing this a long time, that a comment that we're not going to do any 75 basis point moves is enough to get this going. But we live in a different world now in trading. Like I said, we saw an hour-and-a-half move, 150 handles in the S&P. That used to be like 5 or 6 months of trading, not an hour and a half. So volatility levels are so high, and that lack of liquidity on that bid ask, it, I went into this real quick, but I think it's appropriate to talk about this at the moment. Let me just come on full screen. As I've talked in the past about what causes prices to move, and you saw it today, we had aggressive buyers, we had no sellers, and the buyers just kept relentlessly just taking all the bids. I remember we were watching live there, we saw like a 500 offer, like 540 offer. When they saw that, they just grabbed it and just kept going. And it was probably midpoint. I think that was around 42, 45 or 50, something like that, just going off memory. And when you see that kind of stuff, it's just phenomenal. But it had to do with that lack of liquidity, which is the very small bid-ask size, and you can't get any contracts done. So if there's a big appetite for the for wanting to own the market, like what we saw today, they're just these prices are gonna go way, way beyond what you thought. And so these folks got to show up tomorrow, right? To keep this bullishness in. Is someone going to want to buy 42.94? I don't know. Hour and a half ago we were 41.40. Is there going to end up to be more sellers and all that? But let's talk a little bit about that. And I always tell everybody it's not volume that moves the market, and especially when you have a thin market like what we traded in today, it's the aggressiveness of the market. And we saw that perfect today, where they were just taking the offers out and just kept bidding, taking them and bidding, taking them bidding, and it was pretty relentless. And we're dealing another, I guess the other thing that we deal with now is we've got the machines, and the machines are a big part. Sometimes when people talk about the machine and the algos buying, it's not, there is no human market maker. They're done. It's all robots, right? So you all have all the bots. So if you go into your broker dealer and you're putting a bid in any stock there is out there, even if it's a little penny OTC stock, there's not actually a person there acting as a market maker. These are algorithms that are matching orders and doing all those things. And that's all you're seeing here on the screen when you're looking at the digital world that we live in right now. So I would just tell you that on a day like today, there's just a big run. We watched 200 and 300 and 400 point moves that normally would have taken hours to move. We just watched happen in 30 seconds or 20 seconds, maybe 5 or 6 trades. And that's one of the things that continues to happen from the standpoint of when you get these kind of volume days. Now let's see what we did here. We did 1.69 million contracts of S&P futures, and that's a big number, but it's not overly big number. And we did see the I'm going to go back up and put the VIX up here, and it's interesting because I run our indicators here on the VIX, and the VIX had a objective of 3604. We printed as high as 3664. So that high, that projection up, this came, let's get over here, on 4/8, the high target 3604, 4276 on the VIX. We also, right here, if you look at the PPMs, the PPM 1 gave a buy signal on this bar on 4/5. They got a confirmation buy over here on 4/14, and then over here we got this breakout buy on 4/22 on the VIX. Okay, so this was just telling us we're getting this sell-off, and then we get to this projection, and now look at this, we're getting we got two extremes and we started to roll over here. So this is what I said earlier, around 31, 32 VIX, you want to be looking to sell around 20. If we come back over here, we're below 20, 2085, 1975. Those are the under 20 is your sell zone, and over 30, 32 is your buy. Yeah, and I agree with you, Chris. This is one of the fastest 3-day moves. And I was talking about the 3-day pattern and all of those things coming into play. Today's action was just completely insane from that standpoint, right? So there was just, pretty much most of this stuff happened today. Like I said, at the last hour and a half, we were at 41.40, so what can you say? So anyway, folks, it was great hanging out today. We got to do follow this trade. There really was just a one-sided trade day. It's really fun when you're getting swings and there's actual trading opportunities, and you have to, at any point today, you would have had to buy into, an optimistic price, to say the least. Let me just see what you folks are talking about. Yeah, I just want to look in some comments to close here, just reading through a couple of comments here. Yeah. Yeah, let's do something here. Let's go back over here to ES. Yeah, so this is an interesting pattern, folks. It really is. We basically got I'm going to draw in something real quick here, and then we'll call it quits for the day. I'm going to attempt to do this with my mouse, but over here, oops, hang on. Over here was one of these bubble bottoms before we did this. We've got another one setting up here. And what we've seen though, and I'm going to draw some arrows in, this is what's happened so far, is that we're really looking at pretty much we've been a little above and a little below, but we're really into this box formation, and the markets are just doing these zigzags moves. And I can tell you that all of the patterns that are unfolding are in threes. There's no impulse waves here. This has all been a corrective wave going all the way back to the highs here. This was something I talked about earlier when we were looking at some of the long-term trades charts when we started today, is everything's in threes. There's no impulse waves down. So we're definitely in a corrective phase. Whether this 41, we'll call it 40.50, but this 41.20 number on the monthly chart ends up to be a magic number or not, we'll have to see. And what will happen from the standpoint of these patterns, it will PPMs have all turned up today. Pretty impressive. Big move, 285. I still think that you got an RTX sell signal here. Let's take a look at NASDAQ real quick here as well. NASDAQ turned up as well. RTX sell, Russell. Let's go Russell Cash. Russell Cash also got it. These are actually the upgraded grid numbers right here that I've got on the screen. Let me, on the cash. So this is the range for today, for tomorrow on the Russell, 1962, 1976. I remember in last night's video, I was talking about the potential of getting back toward 1966. Seem somewhat on, we'll just say it didn't seem like it would take a while to get there. Well, we almost did that today. And so this range, and we're seeing PPMs all turn around. So, you know, this was a significant event. It's not me to judge the Fed or what's happened or what's going on. It's to read these numbers. So tune in tonight to the broadcast for the normal YouTube video, and I'll cover and tell you what I see. So I look forward to seeing you folks there tonight. Appreciate everybody hanging out. And yeah, you know, and I said that I see somebody making a comment that the Monday before FOMC is usually the bottom, and that is the case a lot. The problem is that Thursday is a turnaround day. So a lot of times you'll get that bottom, you'll get some follow through, and then a turnaround. So we'll have to see. The PPMs are looking interesting, although like on the Russell, we're still minus 0.46, minus 0.635. So we're still in trend mode down. So while this was impressive, we got a 3-day rally. It was pretty impressive, I have to agree. So I will see you guys tonight. Appreciate it. Everybody's hanging out. And I will, we had quite a few people. I think we had 800 live. So quite a few people were hanging with us for a while there. So appreciate it. I hope you enjoyed going and using these indicators that we're selling. Somebody asked about the indicators, and the links right here if you want to find out about them. And that would be go to kindlereport.com/indicators, and you can find out how to get them. You also get access to our live room for a month. A little glimpse of what we're doing in the live room. Just didn't have any live trades, and you don't have any lag time. It's real time. The problem with YouTube is you folks are 20, 30 seconds behind the markets. So there's no way to do anything live on there and do trades, because you're in a market like we had today, you'd be way behind. So anyway, thank you everyone. Appreciate it. We'll see you tonight. As always, it'll be a pre-recorded video again, but I'll have some good content on there. So thanks again. I've just figured out how to get more of my time back. I managed to grasp, I think I figured out 9 hours back of my life by doing things the way I am, and basically doing it live to myself and then sharing that recording. And they'll be out at 9:30 Eastern. We'll continue to even premiere them, or we'll do them at that time. So yeah, so Ed, tune in tonight on the YouTube, and I will give you that answer, and everything will be good to go. So thank you everyone. I appreciate it. See you later.